Welcome back, everyone. Welcome back to the Entrepreneur Investor Connection. Today, I'll be talking about equity crowdfunding, which is one of the easiest ways you can invest in early stage companies, and I'll explain why that's super important. So I'll start out by talking about what equity crowdfunding is. So if you've ever invested in stock, right? So let's say you invested in Tesla. When you invested in Tesla, it was already on the public stock market, right? So when it hits the public stock market, there is a certain amount of value it needs to have, a certain type of market cap it needs to have for it to be able to reach the public markets. That value is, I think it's $300 million, right? For you to be able to be on the stock market, I believe the New York Stock Exchange and stuff like that, I believe it's $300 million market cap you have to have. So most companies don't start out there, right? They don't just go public by being worth $300 million. They build up over time. And by building up over time, what they're actually doing is growing slowly early and then eventually getting to a point where anyone can invest. So if you look at a company early and you say, again, let's look at Tesla or Amazon or any company like that. When they're first starting, the value of that company is much, much less. So if you invested, let's say you invested in Amazon when it was worth $5 million. And then when it IPO'd, it was worth $300 million. You made a lot more money than when it went from 300 million to 500 million, right? Or even 300 million to a trillion. That's only 3x. But if you got in when it was 5 million and it went up to 300 million, that is a much bigger jump. So what happens right now is venture capitalists are the ones that are involved in this type of investment. They are allowed to invest early in early stage companies because of a few things. One is they have a fund. A fund is allowed to invest in companies like this, but individuals can do it too if you have certain criteria. That criteria, though, is tough to get, right? That criteria is you have to be what's called an accredited investor. How do you become an accredited investor? You become an accredited investor by a few different things happening. The first one is you have to have a net worth of over $1 million outside of your personal home. So let's say you live in a home that's worth $1 million. You're still not considered an accredited investor. You have to have $1 million outside of your home in your net worth to make you an accredited investor. Another way you can be an accredited investor is you would have to make over, I believe it's $250,000 a year for 2 years. And if you're married, I believe it's over $350,000 over 2 years. And then you're able to invest in these types of companies. But I always looked at this and said, that is really unfair, right? The idea is if you're rich, you can try to get super rich. If you're not rich, you can't get into these deals because you may not be savvy enough to understand what you're doing, so you could lose your money. So the government put these laws in place to say we want to protect our people, and we don't want them investing in things that are probably not good investments. And they're right, because most of these investments go out of business, right? The earlier idea is, the more likely it will fail. So venture capitalists know this very well. So what do? They invest in a bunch of ideas, right? Not just one. So a venture capital fund will invest in 20, 50, 100, 200 ideas, knowing that most will fail. But the ones that do succeed huge, right? So basically, they would 10 to 1,000, 2,000, 5,000x their money. So imagine if, let's make the math easy. Imagine you invested $1,000 in 10 companies. 9 of them went out of business, but one of them returned you 10x. Now you made all your money back, right? So one brought you 10 times, so that 1,000 turned into 10,000. You just invested 10,000, one in each. 1 times 10, 10,000. One of them brought you 10,000 back. You got your money back. What tends to happen with venture capital is one will 1,000x, 20x, 50x. So if you think about that, right? If you invest in 100 companies and 5, 6, or 7 give you 1,000x or 50x, 20x, whatever it is, you still make more, even though most of those companies went out of business, right? So how can people like me and you do the same thing? And we can, because Obama passed a law called the Jobs Act in 2012. And it's just really getting started now. And what it allows is for people like me and you to use a new innovation called equity crowdfunding to invest in companies early. And I'm going to show you how all of it is done. But the first thing is to understand why it exists and why you want to be involved in it, why I'm already doing it, right? So the idea is now there's a law that says if you're not accredited, aka rich, you can invest up to a certain percent of your money in these deals. They're going to limit how much of a risk you have, but at least we can be in the game, right? So how does it work? The law was passed and it says if you are a company that wants to equity crowdfund for us to protect our investors, our people in America, and I guess in other places in the world, but mostly America because Jobs Act, Obama, U.S. president passed it for Americans. You have to do certain things. So as a company, you are abiding by the same rules as the public companies. You're not technically going public, but you are being scrutinized at a level that makes sure you're not, trying to rob people, right? So what are these rules? One is you have to file with the SEC, which is, again, we had Pete Diddy last week on the show. He was talking about how he had run-ins with the SEC. We talked about Martha Stewart had run-ins with the SEC, Mark Cuban, Elon Musk, all these big guys. They have run-ins with the SEC because the SEC is trying to make sure that we as investors are not being tricked or they're not having an unfair advantage to getting rich that we don't have, right? So when you look at people like what happened with Mark Cuban, he was able to sell shares of a company that he knew something was going to happen. So he sold it, but the public didn't know that. So he made money and then the public lost money. So the SEC came in and gave him, I think it was like a $25,000 fine. But again, when you think about it, he probably made millions and he paid a $25,000 fine. This is a world that is outside of our reach, right? And now the government is slowly putting us in a place where we could start to reach for some of this stuff, right? So now that you understand why you do it, why it exists, let's start showing you some places where you can look for deals, and I'll show you some of the deals I've invested in already, right? Because my goal is, like I just said, if I invest in 10, 20, 50, 100 companies, peace, family, Christian here. Christian, what's up, man? Then some of them got to do well, right? And if some of them do well, I may make all of my money back on one deal or 2 or 3 deals. But over time, I should win if I do my due diligence, which I'm going to show you even how to do some due diligence, from my training at MetaBronx and working with startups that are raising early stage startup money from venture capitalists. I'm going to show you what venture capitalists look at when they invest their money, just like we are about to. Well, I have. And again, I did mention MetaBronx. So if you are here from MetaBronx, I want you to give the Meta Bronx X. I see him in the chat. 10x times 10 is 100, right? So if you 10x $100, that's $1,000, right? So I'm going to show you my plan has been to start investing 100 at a time in equity crowdfunding deals. All right, just bought the Kraken crypto last night before I went to bed. Nice. We're gonna get you started. Reach out. You'll be getting an email soon. Thanks. Good stuff. All right, so. And of course, I want to also make sure everybody understands that I have a going poll with my audience, whoever watches anywhere you watch, to make sure that I understand what people are interested in investing in. So what I've done is I've created this poll where people on me, if you go to miguelislive.com, people can answer the poll. And I'm going to be changing this question over time. Once I get to a certain amount of votes, I'll change the question. But right now, the audience is mostly interested in stocks. So when we talk about equity crowdfunding, what you are investing is in stock in a company, but you're just investing in it early. So that stock, by the time any of these companies go IPO, the value of that stock is going to be a lot more because over time it grows. So, but there's also other things you have to understand, like dilution, which means if I invest right now, over time, they're going to add more stock. So your percent of stock will go down, but your value per share will go up. So again, we'll go more deeper into that. But where we will start is, what are some of the sites that you can go to look at equity crowdfunding? All right, so I'm going to share my screen as well for that. What are some of the sites? I'm playing my stream too. All right, so, and please subscribe to the channel if you haven't already. Okay, so let's start out by showing you a few sites. I'm going to share my screen. All right, so the first site I'm going to show you is a site I am involved in now, so I will be transparent about that. I do have a partnership with True Crowd. You'll be learning a lot more about that in the coming days or weeks or months. We'll see. SEC, we got to make sure we do things right. So what's cool about True Crowd is True Crowd has the highest per investor dollar amount out of all the equity crowdfunding websites. What that means is on this website, investors give the most amount of money. So if you are a startup and you're going to go on these websites, you're going to want to make sure you're on websites that give you an opportunity to raise money. Actually, this is a good point. I didn't say how much money you can raise. This is a big deal. So if you are a company trying to raise money on equity crowdfunding, there was a limit before last year of $1 million. You could raise in the beginning $1 million through equity crowdfunding. So if you wanted to raise 10 million, you couldn't do that. You had to raise 1 through equity crowdfunding and 9 through the traditional. So one thing Mr. Trump did well was he upped this limit. He upped this limit to 5 million to start. So now an early stage company could raise 5 million through equity crowdfunding, and that's some help, and that's good for people that want to do it. Brian, what's up, man? If you want to jump behind the scenes as well, you could do that. I know you have the way to help me with the broadcast. Brian's a Meta Bronxer. All right, so what I was saying is, so you got to $5 million now. But when you go to $5 million, there's more scrutiny. You got to file more paperwork. You got to get more. Your books have to be audited by SEC regulated auditors. So that's huge. Robinhood. Okay, so is Robinhood a good site to start? Sure, anything is good to start. Any place that you're going to start understanding and putting money into companies is good to start. What I'm talking about here, though, is way before companies end up on Robinhood. So I'll show you in a second what I mean. All right, so when I look at True Crowd has a few companies right now on it that are equity crowdfunding. So let's look at some of these deals. All right, so I'm going to click the first one that we see here. All right, so most of these equity crowdfunding, they have a video, and you see to invest here, I'll go full screen. All right, so to invest, they're saying a minimum of $120. They already have $490 committed. I mean, it looks like it just started. Their minimum funding goal is $10,000. Their maximum is 10,000, 5,000. All right, something's wrong there. Their pre-money valuation is $9.3 million. So this is a multifamily real estate investment cooperative. That's a pretty cool idea. I would look more into it. I could try to play the video. Actually, let me see what happens when I play the video, if you guys can see it.
Thank you for checking out what we have to offer. I'm Shannon Andy, the founder and CEO.
All right, so this is an 11-minute video. I don't want to fill 11 minutes, but how these things usually work is a company comes on, explains the opportunity, explains the pitch. They have all of the breakdown on this page, and then you decide, do I want to give this company $100, right? Or more. Actually, you can give. I remember it's based on how much you make. You can give a certain percent of your yearly salary to equity crowdfunding campaigns. So, all right. So that's True Crowd. That's one of the deals on True Crowd. I'm going to show you a deal on Republic. So on Republic has a bunch of different types of investments you can do, right? They have startups, real estate, video games, crypto startups, right? So that's interesting, right? So let's go to a video game. Let's just look at a video game. All right, if you want to invest in an early stage video game, let's look at this. This art looks cool. Moonray. All right, so they've raised $180,000 already from 117 investors. They have 37 days left to invest. The minimum investment here is $500. Let's see if this video is shorter.
The high priest has made himself an army of my element. Take back what's mine. Bring the element under my control, and I will make you chill. You all who dare rebel against me. Do not fail me. I made you, and I can destroy it. Bring the element under my control.
So that looked pretty cool, right? That looked really nice. That's a really cool looking video game. I don't know where it's going to be for PC and next gen consoles. So that means PS4, PS5, Xbox. So think about that, right? Like, imagine being able to invest in the next Fortnite before it is Fortnite. Fortnite makes billions of dollars, right? So the value of that company is not even public yet. So imagine being able to invest right now. This says that the company is worth, oh, they didn't even put the valuation. So this usually means type of security, price per share, $500 price per share. It's not saying the valuation of the company. So what this usually means is they're doing what's called a convertible note. What a convertible note means is they're going to set the valuation later. So, I won't get too technical on what all of that means right this second, but if I try to do it really quickly, remember I was telling you, imagine investing in Amazon where it was worth $5 million. Well, this company is saying right now, we don't know what we're worth. So we're not going to say you're investing at this amount of money value because we don't know that yet. But when we do figure that out, whatever number we decide, you are going to get that much shares based on that much value. Plus, a lot of times what they do is they give you a discount. So let's say, I'm going to give you the example. Let's say I was an early stage company and I said, I'm going to be invest in me now, and I don't know the valuation yet. But then I set the valuation to 5 million. A lot of times what happens is they'll give you a discount. Let's say I give you a 20% discount. That means I'm giving you the valuation of 4 million, not 5. Because you invested in me early, you get a discount. That's what they do in early stage startups. So think about that. Not only are they early, they also get a discount for believing in the project earlier. So let's say that project ends up going well. They get the value of $5 million worth of valuation, but they also get that upside after that, right? So the earlier you invest in companies, the better it is. So, okay, that was a video game. All right, let's go to Start Engine and see what a startup that's going on here. Start investing. Let's see. All right, let's look at this, a drone company. All right, so this is more fully where I can explain everything. So here they have 711 investors have invested almost $700,000, but at a $35 million valuation. Remember what I told you, the earlier, the smaller the valuation, the better. This is a pretty high valuation, but it makes sense because it's drone technology. They probably have a lot of good stuff. Let's see what they got. Again, I won't.
A few actually follow through.
Yeah, I guess this video is pretty long.
The outcome?
I won't make us watch this video. But okay, if I wanted to invest now, does it say the minimum here? Yeah, it doesn't say the minimum. It's usually about $100. It's usually the minimum. Some companies make it higher, but I've invested at $100, and I'm going to show you two of the projects I've invested in myself, just so you can see how this works. All right, so of course, any questions? I know I'm talking about a lot of stuff that most people probably don't even know about. So if you don't understand something, definitely ask it, because I think this is a very, very important to understand. Equity crowdfunding, I think, is one of the real big innovations that will allow people like us to change our trajectories, right? Because if we could be in some of these deals, this is how people get rich. Usually when a person reaches the pinnacle of their wealth, all they do is this. They just invest in early stage companies because it brings back the highest returns. But there's a caveat. It's a certain timeline till you reach these returns. On average, a startup investment takes 7 to 10 years to return the money. So if you are investing in an early stage startup, you can't expect to get your money back in a month, 2 months, a year. Once you put your money in here, it is in there for 7 to 10 years. So if you invested in this company and it does well, and you even 10x your money, you'll 10x that money in 10 years, not in 7 to 10 years, not in 6 weeks or stuff like people expect, right? So there's pros and cons to that, right? There's tax breaks, there's this, there's that. And again, as you go deeper and deeper in, you will understand. A big thing now is understanding what it takes to, expect in return. But now I'm going to show you what you have to think about when you're looking at investing in a startup early, right? So I'm going to share my screen and show you this this chart that we actually use at MetaBronx. So what this chart does is, and if you're on Instagram, it's on my YouTube Live and Facebook, Twitter, Twitch. So if you are on and you can see I'm going to show you the key areas. And this is through a partnership with Village Capital. They gave us a curriculum at Meta Bronx where we can train companies to get venture capital. But it's the same idea. What you want to look at first is the team, right? So when you look at these deals, let's look at this video game deal. Let's see where they talk about the team. About Moonray team. So, okay, the founder, a serial entrepreneur with a strong creative focus. His mission is to bring next-gen ideas to indie games, right? So then you look at these people, and if you can look them up, even better. The more you understand the team, the most important part of a startup, actually, from what I've learned through dealing with venture capitalists, is the team. Because what happens with ideas is they change. And if you are a good team, you can pivot and make sure you're making good decisions. But if you have a small team or a not good team, companies die, right? So this is one of the most important things venture capitalists look at. They look at the team, and you as a person that's investing early stage, you want to understand the teams. So the next thing you want to look at is the problem and vision. So problem and vision is basically what is the problem this company is solving and what is their vision for solving it. So when you look at other, I'll show you some of the things that I've invested in and I'll explain why I invested in them. The next thing is value proposition. So that means what value do you bring to the potential client or customer, right? So if I come up with a company, but there's no value to someone else, nobody's going to pay for that service or use my product, right? So you have to look as an investor and say, what is the value that this idea creates and for who? And do I believe that it's a good one? Do I believe it's a good value? And do I believe that people are going to do it, right? So that's a big thing. Then the product. We saw how good that video game looked. So you could say, I like the way that looks. I think it's going to work, right? The market. Who are they trying to solve, to target? You saw, even in that quick rundown I showed you about that video game, he said they said they're targeting the next gen consoles. So PCs too, right? So that means PlayStation, Xbox. So now you can see, okay, they have a market. Like if they get on the PlayStation, Xbox, maybe it could do well. But again, just like any investment, things can pass or fail. They can do well or not. Business model. So with a video game, sure, that's, you understand, people pay. But now there's different business models in video games. There's freemium, right? So it could be a business model where everybody gets to play the game free, like Fortnite, but they make their billions of dollars on these skins and these packs, right? So that's a business model. So if you were early into Fortnite as an investor, you had to believe in that business model, right? And then scale. Scale is how big can this thing get and how is it going to get there, right? So a lot of times when you're looking at these things, you'll see their plan for scaling. And then, of course, when you're dealing with venture capital, which is different than this, you're going to look at what's my investor exit, right? So if I am giving you money, when do I get my money back? You want to understand that, right? So as a venture capitalist, you'll do that, but then you can do that with these as well. So I'm going to show you now some of the deals that I invested in and how I thought about them. All right, so I'm going to take questions too. What are the risks? All right. The risk is the earlier you invest in a company, the more likely it is to go out of business, right? And I know, Caitlin, you are into real estate. So I'm going to show you on Republic, you can invest in real estate too. So check this out. Let's say, all right, let's look at one. 44 East, 44th Street, Austin, most spectacular residential condo. So you can invest in a condo for minimum of $258. That's crazy, right? So this condo, they're willing to, so far they raised $136,000. I guess what they're gonna do is split the profit with the annual dividend. So 2.3% based on what you give is what you'll get back. That's a lot more than a bank account, right? So again, why do people invest? To grow their money, however slowly, but it's gonna grow versus keeping it in a bank account and the price of the dollar, the value of the dollar going down in value because of inflation. Every year on average, inflation, the dollar goes down 2 to 3%, something like that. This year has gone down 5 to I think 7%. So if that keeps happening, keeping your money in a bank, not a good move. If you put it in something like this, though, you get 2% plus. So that's where, it makes sense to invest your money instead of keeping it in a bank. The thing to understand is when you put the money in, you no longer have access to it. You're just going to get this interest. So it depends on what type of investment you do. You have to understand that money is being used for that. You can't take it out and use it for your bills. Like if you gave this property your $258, then you needed to pay a phone bill. You can't do that, right? So that's where you want to have money that you use for bills and money that you have for investing. So, all right. So, wow. Freezy melts. Why'd you say wow? I'm not sure. Tell me what you were thinking. All right. What happened if the company doesn't do well? Your money is not returned. Yeah. So if you put money in a company that does not grow and goes out of business, you lose your money. I spoke to a venture capitalist who actually an angel investor. So there's venture capitalists and there's angel investors. Angel investors are what's called accredited investors. They're the ones that have met the criteria of net worth or salary, and now they can invest directly into companies. I met one that was Hispanic. So, of course, I was like, wow, I would love to know how you got in this game because there's not a lot of us in this. So he told me when he first made a lot of his money, he put $1 million into an early stage startup. He said it was gone within 6 months. The company went out of business. So he put $1 million. I'm talking about putting 100. He put in $1 million and lost it in 6 months. He was like, that was so devastating, but I needed that lesson. I needed to understand that you can't do that. And that's an expensive lesson. But now he's done tremendously well. The week I met him, he had an exit. What does that mean? It means he invested in a company really early and it went IPO. So he made, I believe he said he made 5,000 times his money. And a guy at his level, he writes checks from 50,000 to 250,000. So let's take the low end, 50,000. Let's say he only wrote that company a $50,000 check, and I know he wrote more than 50,000. Let's do the math. 50,000. Actually, can you see my screen? Let me share my screen. So he invested 50,000. Can I make this bigger? No. Times 5,000. He made $250 million or 50,000. But remember what I just told you. In one of the first deals, he lost $1 million, right? So again, how many deals did he put money in that lost? And this one gave him 250 million, right? That's where you have to understand that's how this works. You need to diversify different asset classes, different projects, and you never know which one is the one that's going to bring you back the huge amount of return. And that's what venture capitalists do. And that's what angel investors do. So, okay. Can you share that one with me? Which one? The real estate one? Oh, this one? All right, yeah, I'll share this right here. So this is the link to what's on the screen right now. So Republic, like I said, Republic has a bunch of options for different types of things. But what's really cool is you can invest in almost any industry like this. I'm going to show you one called Fundana, which is a subsidiary of True Crowd, which allows you to invest in cannabis businesses. I've had a bunch of people tell me, hey, if you ever see anything on cannabis, I want to invest. Well, the way you're going to be able to invest is through equity crowdfunding. So this site is only for cannabis startups. So look at this one. Let's just click one that's has some traction. All right, so this one has raised $56,000. Let's see what this is. All right, so they have a 12 million valuation. We spoke about understanding the valuation. They are, let's see how short this video is. So 30 seconds. All right, let's watch this one. All right, so this is a locker business. It's kind of like Amazon, where they send the package to a locker and you go pick it up from one of the lockers in wherever they are. So they're doing this with cannabis. Makes sense. I don't know how likely that is to succeed. Again, I'm not that big into cannabis, so I haven't really studied that. But if you are and you believe this makes sense, the minimum investment is $300, right? But that's just one. But let me show you. Actually, let me show you more of the deal so you understand the full deal. So right now, what they're saying is you can invest a minimum of $300. It's worth 12 million right now. So let's see how many shares you get for the 300. No. All right. So, but with the 300, if this ever gets to $1 billion or $500 million or $100 million, that means the value of your stock could be 10x. Of course, there's going to be dilution. So you got to really, there's a whole calculation you got to know and understand over time. The more shares are produced, the less your, oh, look, so it says right there, $1.50 per share, Class A, which is good. So let's say right now, you buy $300 of worth of shares at $1.50 per share. Let's do the math again. So 300 divided by $1.50. So you got 200 shares. So let's say one day the value of these shares go up and now they're worth $10. Now you made $2,000 from $300. Actually, yeah. So that's how you, over time, grow your wealth, right? Instead of keeping that $300 in a bank account where the value is going down and down and down, you invest in projects like this. The risk is they could go to zero and that $300 can go completely away. But if you do enough of them, some of them will succeed. So I'm going to show you two that I've recently invested in. One I did on Republic. This is the deal. So this is my profile on Republic, which is cool because you'll be able to see what projects I invested in on Republic, and I'll paste it in the chat for anybody who watches this later or now, right? So this is a startup, or not even a startup. This was a fund that I invested in, and I'm going to explain why I invested in it, right? So this was a $5 million raise. Remember I told you about the rule, how they changed where you could raise up to $5 million? That's what Arlen Hamilton did. And as soon as I saw she was doing this, I said, I got to be a part of it, right? So what is it that I'm being a part of? Backstage Capital. I'll make this bigger so if you can't see it. Backstage Capital is a fund led by Arlen Hamilton, who's a famous venture capitalist now. But before, she was a homeless LGBTQ Black woman. She raised a fund that has invested in thousands of founders of color, LGBT, women, right? So when I saw that she was creating a fund that I could invest in, I said, all right, I'm doing that. And I gave it $200. As you can see, I committed $200 to this project. So now I own a certain amount of her fund. And if her fund does well, I will. And all right, so per share price was $100. So I got 2 shares. But again, I wasn't doing that for only out of hope that it grows in value. I also did it because I believe in her mission. I believe what she's building has to be created. I wish I could create it. And one day I hope to create it. But right now, she's doing it. And she was needing money to grow it. So me as a person that's looking at the same world and hoping when I get mine, people will invest in me, I invested in her. And that's my hope, that eventually she does it. And if, look, I put on my thing, I believe in what Arlen is doing. I hope to join her and do the same someday. That's why I invested in her. And she's already successful. Hopefully this takes her even further. So that's why I invested in that one. I'll show you the next one I invested in. I invested in this one in Net Capital. This one actually was, let me see, this is my dashboard. This one is Dashable. Oh, look, you can still invest in this one. That's cool. I didn't know that. All right, so Dashable happens to be a Meta Bronx company. So I told you about Meta Bronx. Meta Bronx, we help startup founders of color, underrepresented, women, LGBT, just like Arlen Hamilton. We help these companies raise money. We've helped startups raise over $8.5 million through Meta Bronx. But at the same time with Meta Bronx, we also bring young people, like a lot of people who are watching this video right now, into the world of startups. So they understand how this works. And right now through this video, they're understanding how they get funded. So Dashable put themselves on an equity crowdfunding campaign. It started, I don't remember when it started, but the deadline is soon, 11 days. It's $4 per share. I invested $100. So I get $100 worth of stock value at a $4 million valuation, 411, right? So the idea is, again, I know this company. I've worked with this company for over a year. I know how special they are. I know that it's pretty much racism why they are not invested in. That's so with me, that money, no problem. I understand it. But now there's an opportunity for me to invest in them. Before, it's crazy. We're working with startups. I'm helping startups, but I can't invest in them because I don't meet the criteria of an accredited investor, right? I don't make $250,000 a year for 2 years. I don't have $1 million worth of assets outside of the home I live in. That is pretty much 1%er stuff, right? So most people cannot be accredited investors. So most people can't invest in companies like this. But now because of situations like this, I was able to. So I did. This is the first Meta Bronx company that did equity crowdfunding. So of course I was going to invest in it. And I did. So, all right. So those are 2 of the ones I did. Again, I know the team. I've worked with the team. I know the problem and vision. So when we talk about the 2 that I invested in, let's talk about the team first. On the first one, it was Arlen Hamilton. If you look up Arlen Hamilton, she's worldwide famous for being who she is, investing in who she's invested in. And a lot of her companies have already succeeded before she did this campaign. So her team is strong, right? She's doing well already. So that's why no brainer. If we look back at the next thing in the chart, which is, let me make this a little bigger, which is problem and vision. With Arlen Hamilton, the problem and vision is my same problem and vision that I'm trying to solve with MetaBronx. Right now, venture capital goes to very few minorities, women, gay, LGBT, all that. Very few, like less than 10% of all the venture capital money in the world goes to this set of people, which I am one of them, right? So I want to make sure that helps. And her vision for solving the problem is she's going to raise money and she's going to only invest in people like that. So I believe in that problem and I believe in that vision for solving it. Her product is a fund. Her product is a fund that gives money to companies that are led by people of color, LGBT, women, right? So that's a good product to me because that exists and she's doing it already. Her market, who's her market? People who believe people like that should get funding. It's not fair that 10% goes to just those people when women make up 50% of the population. So if only 10 minorities, Hispanic, Black, Asian, whatever, still, that's crazy, right? So I believe in her product. I believe in her market. Her business model is to write checks into these companies, and eventually some of them will succeed so well that the fund will return a profit. Now, that is a business model that works, but just like certain businesses, a lot of funds fail. So I, as a person who understand that, still have invested in it, right? Restaurants fail. A lot of restaurants fail, but people still invest in restaurants, right? I personally have never invested in a restaurant, but I invest in funds that are going to fund innovation led by minorities, women, and LGBTQ people. That's my thing. So I believe people like that can innovate like the rest of the world. We're just missing the opportunity to. So I invested in her startup. I mean, her fund, right? And scale, with money comes scale. She raised $5 million, which is not going to make her invest in that many more companies, but it's going to help her with operations, help her make her company more strong to scale. So for me, worth it. What's my investor exit? So any fund, when you give money to a fund, the way it works is, as a fund manager, so her and her team, they take 2% of the money. Then whatever the profit is after, so let's say, again, we take that example of 10 companies. Let's say she invests $10,000 in 10 companies. That's $100,000. Well, let's say one of those companies returns $10 million. Now she has made $4.99 million. So she needs to return 80% of that money to the investors, and her fund keeps 20% of it. That's the normal 2 and 20 is called. So if her fund works, the people who invest in it get 80% of the upside. So me, I'll get 80% of the upside if that works out. Of course, who knows? I'm not only doing it for the money. If it works, it works. If it doesn't, I know I supported a person that had a great vision and had a good chance of making it happen. But if it doesn't, it doesn't. Entrepreneurship is hard. Many factors around whether it works or it doesn't. But people need support. If a person like that is doing the type of work you think is needed and she's succeeding at it and you can help her, why not? That was my whole plan for that. So again, any questions? I know I'm talking about a lot of things around investing early in startups. This is definitely an asset class too, right? Like if you look at the last few days I did crypto. People understand crypto. You can invest in crypto. You can invest in real estate. I did real estate. I did stock. Now I'm doing early stage startups. right? So these are different asset classes. So let's say you wanted to invest in different asset classes. Right now, you've already seen 4, right? And this is kind of like an alternative. They call it like an alternative asset class because it is riskier than real estate. Crypto is riskier than real estate too. Stock is less risky than stock is less risky than real estate. No, real estate is less risky than stock. So again, though, the idea is understanding these asset classes and saying, okay, as money is generated by me, how am I going to invest in these asset classes along with paying my bills, right? So a lot of what the rich people do, when you see a person that's really rich, they have invested in a lot of these asset classes, and some of them, those investments have made them a lot of money, right? So it's very rare that somebody just works a job, saves money, and becomes rich. You know, you can buy a home and it's going to grow in value, sure, but it's not really going to make you rich, right? And of course, not everybody wants to be rich. That's another thing about personal finance. You don't have to be rich. You just have to live a life that you are going to enjoy and make sure your bills are covered or your lifestyle is covered through the income that you make. The beauty of investment is putting more money into them eventually could bring you more money that you could use for that lifestyle, right? So you're not going to just put money into one of these startups and then next year have $10 million. That's not how it works. But over time, so my goal with equity crowdfunding, as I've been showing you, is putting $100, $200 at a time in projects I believe in that I want to succeed. They most of them won't succeed though. But the ones that do, 1, I'll be happy because I helped that happen. But 2, maybe I get a check for a huge amount of money as well, right? So it's a win-win. At the end of the day, sure, I can lose money too, right? Like, let's say I put $100 in 10 companies and 9 of them fail. You do get a tax write-off for doing it though, right? So if you invest in companies and they lose money, like the guy that invested in the $1 million in that company and it failed, he can write off that $1 million as a tax loss. He lost that money. So now future years when he owes taxes, they deduct the $1 million he owed. Again, not financial advice, but this is another reason why rich people do this, right? So if you think about it, if I'm rich and I'm making millions of dollars a year, I owe a lot of taxes. But if I'm investing in startups, that lowers my tax hit. And eventually, some of those startups may actually bring me back a bunch of money. Guess what happens when that happens? You pay less tax on that gain than any other type of gain. So think about what I just told you. Let's say I'm rich. Let's say I made $1 million this year. So I owe $500,000, right? Just to make the math easy. I owe $500,000 to the government. Let's say I take that $500,000 and instead of giving it to the government, I invest in 10 companies at $50K each. One of them in 10 years returns me 5,000x. I just show you the angel investor who invested 50,000, probably more, and made $250 million off that investment. But I just invested in 10. Let's say I just make 2x on one of them. I still gain because I paid less taxes that year, which I was going to have to pay it anyway. But now I invested in companies. Now I got that plus I made double my money and I pay less tax on that double the money, because if you work a regular job, like let's say when I had a full-time employee job, I think I paid like 40% tax, right? In this, you pay like 20% tax. So think about this, all these things. If you're rich, you are making more than most people. But then you do tricks like this, you pay less taxes over time, so you keep more of your money on top of it. So this is why I'm talking about this content, because the more I learn about this stuff, I want us to do the same thing. And now we can. You don't have to be making millions of dollars to do any of this stuff. I just showed you how to do it with $100 at a time. Again, consult a financial advisor, an accountant, understand what you're investing in, right? Because you want to put the money in companies that you believe are going to do well. So you want to really study what makes companies do well. And all this stuff helps you. And this is why I talk about entrepreneur investor connection, right? The idea is, if you look at a company and you say, how would I do this? Or how are they doing it? You start to have to think like an entrepreneur, right? You have to say, all right, I'm investing in this company. What are they doing? All this stuff I showed you, problem, vision, team, this is all entrepreneurship stuff. But now as an investor, you're looking at it from that lens. The more you're able to look at it from that lens and understand it, the more likely you are to make better picks, right? So if I am a person that understands entrepreneurship, when I invest, I'm looking at it as a person that if I was running that company, what would I do? If that person is even better than me at running a company like Elon Musk, right? So this is why Tesla does well, because people look and they say, well, he's a good entrepreneur. I'll give him the money I think is going to grow, right? But then if you look and you say, what do I believe they're doing? Do I believe this needs to happen? With Tesla, electric vehicles, climate change, if you see we're getting more and more floods and stuff like that, that is climate change. So how can we change that trajectory? Electric cars. If Elon Musk, a good entrepreneur with a good idea, a good problem and vision for solving it, I'll bet on that guy, right? And I have. I put money in Tesla because I believe if anybody's going to do it, he has one of the best shots. Whether it happens or not through him, who knows? But I put my money on the right side of history, I think, right? And that has returned me pretty well because I invested in it earlier, right? Right now, everybody's investing in Tesla now. But if you invested even a year and a half ago, that stock was like $80 a share. This year it was like $700 a share, right? But again, I invested earlier than most people. So the earlier you invest in a company, the more money you make. This equity crowdfunding allows you to invest as early as possible. There's only one way you can invest even earlier, and that's what's called a friends and family round. So what happens most times in minority communities is our friends and family don't have $100,000 to give us. So it becomes much harder for us to raise that kind of money. So this is where we can help more people like us through $100 at a time. Imagine your product, your idea was going to take $100,000, and you can get 100 people to give you $1,000. But now they own a part of that upside with you. So if your idea ends up working out, they didn't just give you $1,000 and they were like, good job, pat on the back. No, if you win, they win. That's what's available now with equity crowdfunding. So definitely I want to have any questions. And you can see I cut my hair bad, and I was giving myself a haircut and the clip fell off and I just buzzed myself. So, but still the show must go on, and I'm on anyway. So any questions about anything I just showed? Because I think this is super important. It's a pretty new asset class for people like us. Talking about within the last 2 to 3 years, this has even been possible. Now it's becoming more and more popular, right? Things are starting to launch as equity crowdfunding campaigns. I myself am working with startups that are going to launch equity crowdfunding campaigns. I'm creating projects that I'm going to do as equity crowdfunding campaigns, because the idea is we would love to everybody to win with us, right? Any company who's like, hey, I would love to win with my community. How can that happen? My community can't even invest in my company. I have to wait and hope some venture capitalist, some rich person, angel investor, invest in my company. And if that works, that person just ends up getting richer. But how does my community get better? Now, if your community invests in that idea and it does well, you win. The community wins and you win. That's an awesome opportunity, I believe. All right, so let's see. There's some questions. When do you first buy Tesla stock? I bought it like in November of 2019, I think. It was like $80. What was the first stock you bought? It was Tesla. So, and I'm going to tell you why I did it. I was not a person that understood any of this stock stuff. I was in the stock world as a tech entrepreneur. Whenever I work with companies that gave me stock in their company as a founder or as a person that did work for them, I got stock. But I never fully understood how that worked. And none of those companies to this date have worked where they paid me money, but I had stock. But I didn't really understand it. So one day I was driving and I heard on, I think, Bloomberg, what Elon Musk was about to do with the battery for the car, for his Tesla car. He basically was creating a battery that was not only going to be used for the car, it was going to be used to power homes, and it was all kind of crazy thing. And I was like, wait a minute, that's pretty genius. And the battery was coming out of Tesla. So I was like, okay, if that battery thing works out, again, I thought like an entrepreneur, right? I said, okay, let's look at the person. Elon Musk. Okay, I think that guy's pretty smart. He has had a good track record. That's a genius idea of the battery. But first of all, what they said was that battery was going to last like 1,000 times longer than the batteries that are in cars right now. So I was like, that's crazy. Two, it was not only going to be used, that same technology was going to be used in other things, and they would license it from Tesla. I was like, whoa. Electric vehicles are going to be a thing. Driverless cars going to be a thing. This guy has the lead by far. So I said, all right, I've never invested in a stock, but Cash App had just updated, or that I just realized I could buy stock in Cash App. So I looked in Cash App, saw Tesla, and I said, I think I put in $100. Something like I bought like one share. You think, oh, millions of dollars? No, I started out with like $100, right? And I could have put 20, I could have put 5. I just at that point I said, you know what? I'm gonna waste this $100 anyway. Put it in Tesla stock. That one share now, at least I haven't looked in a long time. At one point, that one share was worth $700 from 100 2 years ago, right? So that's a pretty good gain, right? Of course, I put money in other things that have gone down. So again, though, that put me on the trajectory of trying to understand stock more. And I'm talking about 2 years ago. So the reason why I'm creating this content now is because I wish I knew this stuff earlier. All the MetaBronx students going through our program right now, we got 150 of you. This is why I'm creating this content. So if you are a young person, share this with somebody that's your age or your parents, whoever, so they can start understanding these opportunities, because we are kept out of this game. Minorities, people from communities of color, we're left out of this game. We don't understand it. We're not taught it. So we're out of it. And this is how most people get rich, or at least grow their wealth. So, of course, after you like and subscribe to the video, share it with one person or two and help them understand more too. So if that's the final question, if there's any other questions, I'll take questions. But I think everyone should understand equity crowdfunding and try it, right? At the end of the day, let's say you're going to put $1,000 into Tesla stock. This is something that I thought about myself and why I did this. You put $1,000 into Tesla stock, Tesla is worth a lot of money already, right? If I put that same 1,000 into 10 companies that have a really good shot at getting to be at the Tesla level one day, and one of them gets to the Tesla level one day, that $1,000 investment could turn into a lot more of a gain than that one Tesla stock that I bought at $1,000, right? Again, if I were to put that same 1,000 in when it was $80, yeah, sure, I would have had a lot more money, right? Because Tesla grew a lot since then. But this is why you want to be in different asset classes. You know, you want to put in a little bit of money into different asset classes because you never know which one is going to explode, which one is going to go down. And back then, just to tell you, that same month, I put $100 into Bitcoin. So why? Because Cash App allowed me to put $100 into Bitcoin. Bitcoin was, I think, $3,000 back then. Now Bitcoin is $30,000. So out of those two investments, which one did I do better on? Bitcoin, crypto. Again, I didn't know which one was going to do better, but I put $100 in each. Both ended up doing pretty well. But the crypto one did way better, right? 10x. No. Yeah. It was worth 3,000, went to 30,000. 10x versus 5x, I think, or something like that with 5, 6, 7x, something like that for Tesla. Right? So again, you never know. And Tesla's not normal. You can't expect even what happened with Tesla for most stocks. So that's why, again, it's about investing in what you know. So I understood a few things when I invested in Tesla. I understand tech. I understand that they were gathering data, which data is valuable. Whenever those cars drove, they were gathering data on the roads. So I knew that was going to be valuable. The battery technology, I knew that was going to be valuable. Elon, I knew that was going to be valuable. With Bitcoin, I understood the blockchain and crypto were the future, but I didn't fully understand how. So once I put the money in Bitcoin, I started studying it more and more and more. Then I started putting more money in, because once you start studying, you really can make a decision. So, all right. So the idea is, if you understand now, of course, any questions, the idea overall is understand the different asset classes. If you look at my last few videos, I went over cryptocurrency. I went over stocks. I went over real estate. Today, I went over early stage startups. Tomorrow, I got to think about what assets I'll talk about. Maybe art, something like, I don't know. Again, if you have any ideas, because I see, actually, let's look at the poll, see where we're at now at the Miguel is Live poll. MiguelIsLive.com. Let's see where we are, what people have chosen. So right now we're still in the same. Stocks at 58, crypto 32, other 5. So this is what, whoever put other, what are the asset classes you're talking about? Because I want to know. Again, I'm going to show you art. You can invest in art. Again, the same idea. With $100, you can invest in art, right? There's a new way of investing in art. There's an old way of investing in art. You can invest in art through equity crowdfunding now. So many, many options. So that's another asset class people do. But again, there's risks, there's rewards. So, and there's benefits to doing it for yourself if you just love the art. So there's all kind of things that you can look at, right? There's gold. There's all kind of different things you can look at and say, what do I want to invest in? What's my personal idea of what is going to happen so I can put money into it? Also, actually, this is what I'm going to talk about tomorrow. You can invest in your own ideas. How do you invest in your own ideas? Because that's probably the number one way people gain wealth, right? They come up with an idea, they invest in their idea, and they make it huge, and they make the money. Look at Amazon. Look at Musk. I just told you about. Musk first created PayPal. It made him a billionaire. Then he created Tesla. Look at Amazon with Jeff Bezos. Jeff Bezos created Amazon. Now he's worth $100 billion. Of course, I'm going tech because that's what I know, but you could think about anybody that creates anything. Oprah. Oprah created a media empire. She's worth $1 billion. That was her idea, taking her idea and making it make money for her. So actually tomorrow, that's the one I'm going to go over. how to make money, how to make your idea happen so it can possibly make you money, right? Because there's some ideas that you may feel great about doing, but they may not make you $1 billion, and that's fine. You're looking at a few right now. I create ideas that may not make me a lot of money. It's another one I'm going to do. Nonprofits. MetaBronx is a nonprofit. That's another idea that can make you a living. You may not end up rich off a nonprofit, but let me tell you something. The NFL is a nonprofit organization, and they make billions of dollars. The people who run the NFL and own the teams make billions of dollars, and the NFL is a nonprofit organization. So I'm going to take you through all the asset classes, all the different ways throughout the journey of this summer, especially through MetaBronx. Can you also invest in music? Good question. Actually, there's an equity crowdfund that allows you to invest in music. I'm going to show it to you right now. I'm glad you asked that. Have you ever happened to lose some stock as well? Yeah, of course. I've bought stuff that I sold too early, right? So actually, one is, think about what just happened. COVID-19. Soon as COVID-19 hit, I figured some company's going to figure out a vaccine. So I started looking up which companies. I found Moderna. I spoke to a few people that said Moderna is like the Google of the medical space, and they are going to have a vaccine for COVID faster than most. So I invested in it. Somehow the value of it went down though, and I sold it. Now I looked recently and it went up a lot. So I would have made money if I held it longer. So that's the thing. Warren Buffett says this. Don't sell if you didn't make money. If you're going to lose money, just leave the money there. I sold it because I took the money out and I put it into crypto, right? So that was me saying, look, this money went down. I invested, I think maybe $100 and it went down to $70. So I said, I'm going to take that $70 and put it in Bitcoin, right? Or Ethereum or something like that. So that's what I did. All right, let me show you the way you can invest in music. This is actually pretty cool. I'm going to share my screen. Unshare this one. Okay, so this company is called Vest, right? So how it works is VEZT.co. Oops. .co, I think. Yeah. So this company, what they do, which is super genius, is, okay, let's say you have an artist you like, but they're not big yet. But you know one day they're going to be big. You can go invest and buy a piece of their song. And what you do, what you end up getting is you get royalties on their song. So again, you participate in the upside of the win, right? So let's say you believed in Rihanna before Rihanna was big and you loved her song. You can go in here, buy a percent of her song for little as $100. And over the next, I guess every song has a term. So you could be like 5 years, 3 years, 1 year. You will get a percentage of their royalties. So let's say you do this for the next big person in your hood, and they blow up and they start making a lot of money in the next year or 5 years, whatever that term is, you will start getting a return on that investment through their royalties. So that is pretty interesting. And this company is a company that I have worked with. And actually I interviewed them on my show actually, and I'll give you that on my channel too. I'm going to link you to that video. You could really, they break down how it works. It's pretty freaking interesting. If you Google Vest, I think you will come up with my video actually, but let me check. I'll send you that. So if anything, I'll put it in the description because it might take me some time to find it. I don't want to scroll through all my videos. All right, this is taking too long. So if you look on my channel, there's a vest video on them. Let me try one more thing. I'm gonna try really quickly to search my own content. Yeah, right there it is. Cool. So I'm gonna send you this link. Royalties money. Yes. Royalties is how artists get paid, right? So if an artist is doing well, their song is being played all over the world, royalties is what makes those radio stations, TV shows, they have to pay that to the artist, to the musician, and that's what you will participate in. That's kind of like their profits, right? So you, just like equity crowdfunding, you got equity in their song. So you get part of that equity back when they make money. So pretty cool idea. And again, one of the ways you can invest in music, right? Early on, or there's actually songs from Beyonce on here. You can go on this app and see songs of pretty famous people already. Like the last time I looked, Beyonce's song was on there. So we're not talking about only people who are up and coming. But the idea is, earlier you find them, the more upside, right? If you Beyonce, you don't need the money. So if you're giving people access, your deal is not going to be as good as Beyonce when she first came out and nobody knew who she was, right? That deal is going to be much better. So the earlier you can believe in something and you can invest in it, do that. So that's where I want to make sure everybody understands. I think tomorrow I'm going to talk about entrepreneurship and creating your own ideas. That's what I'm going to do. Then I'll talk about nonprofits. Then I'll talk about art. And maybe by then I'll come up with more investment ideas and entrepreneurship ideas. So, all right, I hope to catch this video later. Yeah, just what it's definitely going to be link in bio. And any other questions? Let me see if there are any questions on the. Nope, nothing on the Instagram. Anything on the YouTube? I did not know you can invest in money. What do you mean by that? Invest in money. I guess. Do you mean like bonds? I'm not sure what you mean by that. But yeah, I'll end it here. I think that was a lot of information. If there's any questions, DM, put it in the chat here on wherever you're watching it, and I'll answer. Also, again, subscribe to my YouTube channel. I'm really trying to get to monetization there. Also, if you have Twitch, go subscribe to me on Twitch. I'm trying to get to monetization there too. Also, I do take these videos and make the audio only on podcast form. And I have that everywhere too. And that is another way I monetize. Oh, that's another thing we're going to talk about. Making content to create revenue streams, just like I'm doing right here. So I'll be another day. I'll go over that. And again, the idea is diversify how you make money. Try to make money in many different ways. Because if you only have one way you make money and that goes away, you're not in a good position. So you want to have as many different ways to make money as possible, and I'm basically trying to show you guys all the different ways people do it. And I try to do all of them. All of them. Of course, there's different people that think you may want to just pick one, go all in on the one. But I don't like that idea. I don't enjoy that idea. I like I like doing different things. I have a nonprofit, as you guys know, from Metabrox. I have a for-profit, Mass Ideation. I invest in stock. I invest in real estate. I invest in crypto. I invest in art. I haven't done a song yet. I'm not really a music guy, but maybe one day I'll try it just to show you guys how it works. And you never know. Put $100 on the right song. Even if it brings you back $150, you made money versus, not trying. So the idea is are they? I mean, invest in music. What do you mean by that, though? Like, give me an example. Like, make a record label? I'm not sure what you mean. Yeah, I mean, there's many ways of growing wealth. Again, you just have to be in the game. If you're not in the game, you're not going to grow wealth. You have zero chance of growing wealth, right? So the idea is just try to be in things. Try to put your money in things that you enjoy or believe are going to work. And of course, you're going to be wrong most of the time, a lot of the time, not most. Depends on what you invest in, right? You know, if you're investing in real estate, it's tough to be wrong. But you could be wrong. You can invest in the wrong neighborhood. You can invest in the wrong property. You can invest with the wrong partners. There's all kind of things that are going to happen, but you can't be scared of that, you know? Popular music, pretty much. Yeah, so with Vest, you can do that. If you look at Vest, there's songs on there that are popular. And you can take advantage of the upside of those songs being streamed for the next few years by putting money in Vest. You buy a piece of that song. Like example you said earlier with Beyonce. Yeah, so invest in that app, VEZT. And again, I made a video. I interviewed the founders. So in that video, they break it down all the way. So if you watch that video, you will understand 100% how you can do this. And download the app. It's free. You know, you can put money in it if you want, but you can just at least look if you just want to understand it. So on that note, I will end the stream here. Hopefully, you know, I start hearing from the comments. I want to know what you guys are investing in. I know it's a bad time, you know, possible recession, you know, a lot of people losing their jobs or can't find jobs. But the real trick is they say, and we're in bear markets for crypto, people believe, stock maybe as well, real estate, the growth of inflation is making values of homes go up. But still, you should always be investing, even if it's $10 at a time, something. Just put money. If you're going to save, invest some too. And that's where, you know, crypto is easy to invest very little bits of money. As you see, these equity crowdfunding, $100. You can invest in a startup or an idea fund like I just did. You know, there's real estate places that you can invest only $100. And like I just showed you with Republic, that one was like $350. You invest in a condo and they give you a percentage of the income every month. There's some cool things like that you don't need that much money to invest in. So this is so motivational, inspiring. Thank you. Love that comment. And hopefully it is to more and more people. I think the idea is we can't just make money. We have to grow money, right? So I wish I understood this when I was younger. But hey, I got a long life left. I started out late in this world of investing and understanding it, but I still got many years to figure it out. And in the last 2 years, the money I've made has grown a lot because I've been in these worlds. I've been understanding more and more. I've been spending time trying to understand it. I've even gone as far as to take my own 401k and invest in myself instead of letting other people invest it. Now that's risky, sure, but I'd rather have my own interest in my own values in what I'm investing in and what I'm doing. So I have my own destiny in my own hands, right? How about investing overseas? So you can invest in startups through equity crowdfunding overseas as well. Like if you want it, or you can invest in stocks they call it emerging markets. If you ever seen that, you can invest in places like that. And actually, one of the companies I work with, Digital Asset Monetary Network, we just did a deal that we will work with Japanese equity crowdfunding campaigns. So there might be a startup in Japan that you may like and you can invest in it. And that's pretty interesting. So that's another thing. We just started those deals, so it's not that easy to tell you about them yet, but it's going to be possible. So over time, the idea is you're going to be able to invest as little money as you want in any asset class. That's going to happen. So what does that mean? You should start developing your interest in the asset classes. Start learning about them. start, if you can, putting a little bit of money in them. So you start to learn about them, right? When I first put money into crypto, I didn't know about all the stuff I know now. But over time, I got deeper and deeper into it because I said, all right, I got money in there. Let me understand it more. Then I saw Ethereum and I'm like, whoa, that's pretty cool. Actually, I could see a lot of things happen with that. Let me put money in that. Oh, this is built on top of Ethereum. I'm going to invest in that, right? So it's like you go down these rabbit holes. So, of course, choose the asset class that you are super interested in because you're going to go down this learning rabbit hole to learn about it. So yeah, I think I'm gonna end it here because I did an hour and a half. Wow. Thank you for anybody who watched at any time you watched. And definitely the replay is gonna be wherever you watched it because they stay live. So if you want to go back and watch more about it, trust me, this one, I think everybody should really understand equity crowdfunding. This is like super, super important to communities growing because if the next Facebook, Tesla, is created by a young Hispanic, Black, woman, LGBTQ person, and they are equity crowdfunding and they're from your community, and you can participate in that upside, there's no better situation than that because the community gains, that person was supported, their idea was impactful, and it worked because you supported it. That is huge. So hopefully that more people do that. And I look forward to hearing about what you're investing in. I want to know what you guys are investing in. So please hit me up and definitely go to miguelislive.com. Tell me what you're investing in. Thank you. Have a good day.